Welcome to the LRF Group podcast, Keeping Current. I'm your host, bringing you the latest intelligence on mortgage rates, the housing market, and what it all means for buyers, sellers, and investors across South Florida and beyond. For months, the military conflict between the United States and Iran cast a long shadow over the housing market. Oil supply shocks, rising inflation, and investor uncertainty kept mortgage rates elevated and buyers on edge. But this week, that picture changed. President Donald Trump confirmed a deal to end hostilities, with both nations set to sign a formal agreement in Switzerland on Friday. And the market responded almost immediately. As of Tuesday, Housing Wire's Mortgage Rate Center showed that 30-year conforming rates averaged 6.73%, down 5 basis points from 1 week ago. 30-year jumbo loans fell 2 basis points to 6.75%, and FHA-backed 30-year loans also dropped 2 basis points, averaging 6.31%. These are modest moves, but they signal something important. The geopolitical pressure that had been holding rates up is beginning to lift.
Now, before buyers get too excited, let's be clear about what the Federal Reserve is likely to do. Inflation is currently running at a 4.2% annual rate, the highest level since 2023. And with that backdrop, the Fed is all but certain to hold benchmark rates unchanged at its meeting this Wednesday, the first under new Fed Chair Kevin Warsh. The federal funds rate will remain in a range of 3.5 to 3.75%, and according to the CME Group's FedWatch tool, rate hike expectations are actually growing. 9% of traders now expect a 25 basis point increase in July, and 26% anticipate one by September. Melissa Cohn, Regional Vice President of William Ravis Mortgage, put it plainly: the Fed is absolutely going to hold rates this week. Even though Warsh is more dovish, he is one of 12 voting members, and he is going to have a hard time getting a majority to agree to cut rates in this inflationary environment. Odeda Cushy, Deputy Chief Economist at First American, noted that the conversation has fundamentally shifted. At the start of the year, markets expected rate cuts by now. Today, markets have largely abandoned the idea that easing is the default path. The question is no longer when the Fed will cut, but whether it will cut at all.
Despite the rate environment, the housing market is showing remarkable resilience. Housing Wire's Housing Market Tracker for the week ending June 5th showed weekly pending sales climbed to 75,856, up from 72,039 during the same week in 2025. That is a meaningful year-over-year increase, and it tells us that buyers are not sitting on the sidelines indefinitely. Mortgage Bankers Association data confirmed the trend. Total mortgage applications jumped 10.8% from the prior week, the first increase in 4 weeks, with sizable gains in both purchase and refinance activity. MBA President and CEO Bob Brooksmith said it directly. The rise in purchase applications points to continued homebuyer demand, despite affordability challenges and broader economic uncertainty. And in a sign that lenders are responding, mortgage credit availability ticked up from April to May, with jumbo loan programs leading the expansion.
Here is the most important number in today's report: 4 million. That is the estimated number of missing home sales relative to historical norms, households who want to buy but have been waiting for the right moment. Odeda Cushy of First American called it clearly: demand has been delayed, not destroyed. Existing home sales recorded their largest monthly gain of the year in May, and Kyle Bass of Refi.com noted that recent rate stability has already begun to unlock refinance activity, as borrowers may be settling into the current rate environment rather than waiting for a meaningful decline. The question for buyers is no longer simply whether rates go lower. It is whether households gain enough confidence in the path of inflation, borrowing costs, and the broader economy to move forward with major financial decisions. For South Florida buyers and sellers, the message is this: the market is moving, rates have stabilized, demand is building, and the window of opportunity whether you are buying, selling, or refinancing, is open right now. The LRF Group is here to guide you through every step. We are licensed in Florida and New York, with offices in Miami and Manhattan, uniquely positioned to serve clients wherever life takes them. Your next chapter starts with one conversation. Reach out to the LRF Group today for a private consultation. This has been the LRF Group podcast, Keeping Current. At LRF Group, our services for your world.